Just wanted to do a recap at the end of the day here, go over some positions that we didn't get to really touch on this morning. Let me close that. So why don't we go over some individual stock names? I mean, I hit on a lot of the currencies in the room today, so let's just go over some of these longer term positions I had questions about today. I think the market's setting up for some pretty good moves in some specific areas. So like today, what was moving for me, let's see. So CIBC, I guess I'll just flip back and forth between long names and short names, but CIBC, ticker is a CM. This is one of our favorite short names. So again, we like being short the financials with growth slowing. You know, like being long things that look like bonds, utilities, with the exception of high yield. So, you know, I've been trading in a core long position in 30s all year, and then you know, utilities has been one of our biggest gainers also. But on the reverse, on the short side, anytime we get a pop in the banks, whether it be Europe or even in the U.S., or in this example, Canada, I like taking a look at, you know, I like shorting these on rallies. So if you do a top down on CIBC, okay, it wasn't pretty much an uptrend. It actually looks just like the price of oil. If you were to overlap a longer term chart of oil, it looks very similar, which makes a lot of sense for a Canadian bank. But this trend changed really at the beginning of 2015. You really needed to hold this lower band. You couldn't do it. And this is the level that I've really been trying to stay core short from up here around 80.5, 82 to 85. So then if you move down to the weekly level, you can see that here's the 200, here's pi. So price is really struggling. As long as we're below 85, that's where my risk is. I like playing it from the short side. And then if we zoom in on the daily level, here's your 30-day. It's moving lower. It's descending. Right? This bounce off the lows in February actually flipped positive from a wave formation. Higher low, higher low, higher low, higher low, higher low. But now this is starting to move back negative. Just similar, very similar to the price of oil. Right? So oil is making lower lows on the intermediate term basis, and now CIBC is doing the same thing. So any bounce in oil, you can take a look at CIBC on the short side. And then if you want to look at the overall financials, I think XLF and FAS, that was another one that was moving pretty good for me today. I think this is due to roll over. I mean, we're back here at pi. It's the right location to be short. Call it a double top here. You can really even kind of look at it as a head and shoulders pattern, even though the neckline's just a mess. But so I'm fine with playing this on the short side, even all the way back to the highs from last year. So I want to stay with that. I think as soon as this cracks, we can be back down to 24. There's enough shocks in the financial system or the finance sector to be had in the back half of the year that we should probably get some more moves down into 2022. I like it. The retailer short. You know, we're consumer late cycle, so XRT is a good name to short. When the market gets to levels like we are right now, you can see it's back up at pi. This line matters here, this dashed line. So you're probably going to get lower high in XRT. I didn't sell any more today. I should have, but we can do some more with that tomorrow. There's really no rush, but you want to be a seller between 45, 46. Chipotle we bought going in front of earnings. This is one of our newer names in our preferred portfolio, so I think this we can get a move back into 475, 494. All the lower highs from earlier in the year in February is around 5.25. So you can still, you know, if you weren't in 2 or 3 days ago, like we were, you can buy this with your risk below this candle low, or even play it with the risk below 384. And then again, I think you can get a move up here into 200, back here into pi. I did some longer term analysis last week that, you don't want to get too wrapped up in all the headlines, because the whole food scare with Chipotle was just the reason for the stock to pull back and give you a longer term buying opportunity. So any pullback deep within these bands, you can see it on the monthly chart. That was a buy back in 2012. It's another buy right now down here in front of 400. And so that was my call. Our call last year was once you broke these higher lows, you could get a move back to pi, and then we were a buyer. We started scaling in all the way down here. I blogged about that, and it's still more of the same. It's trying to find a base down here in front of 400, and I think it's got a pretty good chance to hold and turn back up. So we'll keep working a longer term core position on Chipotle, and then if you get back above 450, you can see there's a lot of room back to 588. That's about halfway of the move down from the highs last year. It's the 30-month moving average there, 588. So that's kind of my longer term target. There's more than 3 to 1 there. If you risk one monthly candle, or even if you take the risk from the lows down here at 384, you're risking this amount for a move back into 600, 700, and then we'll trade around this position on the intermediate term basis so you can compound your results even more. But that's the game plan on Chipotle. I've kind of been stocking Valero, VLO. It's pretty, it's not going anywhere. It has zero momentum, but longer term, it's at the right location where it can probably go back. It can go back to 60, 65 long term, no problem. So I have a small position there. I haven't really added to it yet. I'm just kind of watching that. Let's see, ERX. This is how we're playing oil longer term, just because I like the decay in the ETF. I'm short futures right now, but I'm trading oil futures more from an intermediate term basis. I think this ERX is a good way to do it longer term. This is the bull 3 times leveraged oil ETF. So as oil moves back lower, you're going to get added benefit of being with the decay built into these leverage ETFs, the roll, cost to carry, whatever you want to call it. But this should move a lot lower. I think this can get cut in half. So we were sellers in here. I'm still short. I think this can go back to 20 pretty easily, even 15. You could even make new lower lows if oil moves back in the low 30s. That's ERX. I touched on Germany this morning, France, the financials. If you look at high yield, I'm still surprised that high yield hasn't cracked. Whether you're looking at JUNK for junk bonds or you're looking at the high yield index, HYG, oil's rolling over. I would have thought that it would be under more pressure, so still might be a little early. This is getting late within the cycle. If you look at the weekly chart, if you look at the monthly chart, it's really extended. So this is a good visual right here. This wave formation rolled over along with oil. As soon as oil started to break 85, this started to roll also. And this is just clearly in a long-term downtrend. So you had a really nasty move all of last year that exhausted its move in February. Now you bounced back about 50% of the way. You can see that. So I think it's probably going to fail up here around the 618. We're already past the 50% retrace. So it's the right location for this to start to go the other way. And then if we move down to the weekly level, you can see more of the same. This was the old lower high around 86, and the market's checking up right there. It just hasn't taken out any of these prior weekly lows yet. Once that happens, you can get a move back to this 30-week pretty easily down at 82, and then from there we can see if, you know, it's going to depend on a lot of other factors whether you get a move back down to the lows from this year, 75, 74. So I'm still hanging out short there. I'm waiting to add to it. Treasuries, I'm trying to think what other bond markets you want to do. I covered treasuries this morning. We had a nice pop. I put that in the room. It was a nice morning for us on the long bond. Potash is still going sideways. It's yet to break out, but I think this next move is higher, 22 to 25 longer term. You know, Google I've covered quite a bit. We pretty much bought the low there with the pi cycle in June. Now you're pretty extended. If you slap a Bollinger Band on top of here, it's just overbought. Anything up around 775. So we're still core long this name forever, pretty much. And then but you need to get us back down around 725 to 700 before we want to get back adding to longs on Google. Wisdom Tree, I don't know what its problem is. I'm still waiting for this one to roll back over also. It just got crushed last month, and then, you know, along with Brexit, made new lower lows and then just ripped back to pi here. But I expect this was going to fail somewhere around this area. We're at pi on the 4-hour, the daily chart. I mean, it still has room to maybe get back to 13, 14. The fundamental work on this one probably puts this Wisdom Tree there, this stock around 5 or 6. You can see the divergence on the cycle here, the stochastic rolling over. Weekly levels overbought. It's not overbought. It's high within the cycle. The price is what makes it overbought or oversold. The price could be oversold and the cycle could be high. So I kind of misspoke there. It's high within the cycle on the weekly. Monthly could still have some room to bounce. But that's fine. We can trade this off the weekly level and these lower highs from here for now. I think that pretty much covers all the ETFs that we're playing. XRT, VLO, oil. Now we're getting into the futures markets. Let's just touch on the VIX real quick because it's perking up again today. If you look at the 4-hour, actually let me minimize that one.